for joining the Market Chameleon pre-market show. For those joining for the first time, welcome. We try to do this every trading day pre-market for half an hour with myself, Will McBride, and the main man, Dimitri Pargamanik. Welcome back, D.
Good morning, Will. How are you?
Great. I know on the chat, Mike and Rob are saying they missed us. We were away for 2 days. I don't think that's happened that much. We each had things we needed to take care of, so we apologize about that. But we typically try to get here every trading day between 9 and 9:30 to go over a few things on the Chameleon, look at the market, talk about what we're seeing. So with that, you want to start with the disclaimer?
Thank you. Yep, and thank you for those comments. We missed you guys too. I might have to actually do another day off this week, Will. My son's graduating from middle school, going to high school, so I'll see.
Always a big day. Always a big day.
Yeah. But before we get started, everyone, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker. That's what they're there for, or call your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And I will share my screen.
All right, perfect.
Let me take a look here. And if you guys are joining us for the first time and have any questions, you can put those questions on the live chat on YouTube. Will's watching it and he'll read them back to me. If you want to come on a show live and ask your question, we also put out a link to Zoom on that YouTube chat. If you click on that link, it takes you over to Zoom. Once you get there, click on raise your hand. You don't have to turn on your video camera, but we'll be able to hear your question. You could ask questions about really anything, Market Chameleon tools, data analytics, strategies you want to discuss. You're welcome to come on the show. And other people, I think, will benefit as well, because if you have a question, probably someone has a similar question or may have not thought about it or run into the situation you're talking about, but may in the future. So while we're waiting for any questions to queue up, well, I think I'll start with the pre-market report. I'll also go over on the alert system. We pushed out, on the central alert system over here. We also pushed out the ability for you to manage these alerts that come out. So as we add them, you could turn some off, turn some on. So I'll discuss that a little bit. And I did get a question on order sentiment. So I'll try to cover that as well on the order sentiment, which is one of our new features, came over the email. So I'll try to cover that question as well.
Perfect.
Okay. So this is the pre-market report. And these are stocks moving in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. See 213 stocks made our percentage gainers list, 38 on the percentage decliners. So from this perspective, right now, we look like a more bullish bias at the open. Actually, I think even in pre-market, we're up over 1% right now. Well, in the S&P 500. So let's take a look at the S&P 500 stocks to see if we see a similar situation. I'm going to filter out this list, and I'm going to use this in ETF to select one of these ETFs. So I'm going to select SPY, which is the S&P 500 ETF. By selecting it, this list will get filtered by holdings in the SPY, which are the S&P 500 stocks. So I see here 32 made the percentage gainers list, only one that made our percentage decliners list. So same situation here. Looks like a strong open in the S&P 500. We'll see how it does there, but very volatile. I think things are getting liquid. We've been talking about that. I didn't see some of the news, what they're hitting. I think maybe some good news out of China with they're starting to open up their economy in places that they closed due to COVID. We're seeing some movement to perhaps slow down the inflation with reducing tariffs with China. So that's being proposed there. But still, oil prices are high. right? Interest rates are still going up. I think that's a lot of pressure. We're seeing a lot of illiquidity in the marketplace, up and down.
Yeah, well, to me, this is an inflation battle, something no trader has seen in this marketplace, right? And so we are going to be from inflation report to inflation report. The market's going to be very volatile. Nothing changed over the weekend, and we're in some sort of new bear
Nothing's
market, right?
changed. Yeah. And, if you guys, some of you don't, maybe not even been around during periods of the Alan Greenspan. And I think right now what's different is when you listen to the Federal Reserve and even like to our policy and how they're trying to control inflation or how they're trying to tame inflation, through monetary policy. And Alan Greenspan was very big on productivity. You always heard him talking about productivity. It's all about productivity, productivity, productivity. And you barely hear that right now. Like, what are our policies to increase? Because productivity, that's the main thing. That's where our policy should be focused on. How do we increase productivity? How do we incentivize? Um, you know, manufacturing, producing more goods and services? How do we allow the economy to shift around the resources more efficiently to where it's needed? And it's kind of surprising to me that we're at full employment, but our productivity is going down, right? Doesn't that feel like it? Like, how are we, everybody's jobs at full employment. Nobody right now is really having an issue finding a job. Everybody's hiring tech, but why isn't our productivity increasing? And that's concerning, especially, you hear about the Fed. First, they were saying they were confused. They were thinking that this is transitory. We don't really have inflation. It's just the reaction to COVID. Now they're going the other way, and they're trying to, and they have to. They have no choice. They're increasing interest rates to slow down demand. That's what they're trying to do. Is just, they're saying we need people to stop spending their dollars. And right now, it feels to me, if you talk to people, just regular people, they're thinking the opposite way. I rather spend my dollars today, because if I wait 6 months, 1 year, just keeping it in a bank, I'm gonna end up losing my purchasing power. If I wait to buy a house, or if I wait to buy, a car, or if I even, don't go out to eat to a restaurant right now and just save it, using that money later on, I'll just be able to afford less. And that's the psychology of inflation, right? Like, it's not just what they're trying to control is those emotions, that psychology that, that things are going to become more expensive and people want to spend their dollars today. And that could get out of control, right? So I feel like we're still on the path of stagflation. What do you think?
Yeah, no, I think, again, it's numbers. I think you're absolutely right. Those are the risks, and we're now in the process of fighting the Fed. You can't fight the Fed, right? The Fed's going to have to keep raising rates until inflation gets under control. So listen, every time you go past the gas station, you're at shock looking at the prices.
Right.
My wife has to put the premium in her truck, in her SUV. I mean, it's over $6 now for the premium.
Yeah. Yeah. The oil prices.
Like, you see that, and we go to the same gas station typically to fill up between us and town. And, it is shocking.
Yeah. And I think Saudi Arabia just raised their prices, right? They just announced that they're raising prices on the oil that they're exporting. So they're going up so far as well.
Yeah, and listen, there could also, and I'm not telling anyone to be bullish or bearish, but just talking about things. I read something this weekend, other shocks could happen, right? I was not aware of this. I'm sure you were, D, but in the 70s, basically, the U.S. negotiated with Saudi Arabia to peg every oil transaction to the dollar. And I know we've talked about this before, right? But that led to basically strengthen the dollar and use of the dollar around the world for everything in transactions. Since then. And, our relationship now with Saudi Arabia is probably the worst it's ever been. And you have other major players. I mean, Russia has just told everyone that they'll only accept rubles for their oil, right?
Right.
That hasn't happened. So, I mean, it would be a big situation if all of a sudden Saudi Arabia is like, we want a basket of rubles, yuan, and Bitcoin or whatever, right? They want something other than dollars for the purchase of oil.
Right. And when you think about that, then are people acting rationally and saying, well, I'd rather spend my money today because I'm not confident in the strength of the purchasing power of the dollar in the future. And that's what they're going to have to battle with, right? Like that psychology, what they're seeing around the world, where, you have Saudi Arabia, Russia, China, really now thinking hard, is it a good idea to accept and peg things to the dollar, right? They're starting to think that, and it's just small cracks. The dollar's still very strong, but, if that trend continues, that you're right, that won't be. And are people thinking that? Are they seeing that and acting rationally? Is this just the beginning? Are we seeing inflation where it's going to get out of control, or is just the beginning of it and it's going to spiral? That's the interesting question.
Yeah, it's very interesting.
Yep.
Listen, real quick, we just had a new user pop in, Boris. Could you show him where on the site the previous pre-market shows are recorded so he can go? He came in late, so later in the day he can go and see where the.
Sure. So up here in the main menu it says videos. So this one's live right now. This is you go into here, and if you go down, this is today's, but these are the pre-market videos here. We also put out instructional videos under help. So I think if you go under help, video guide, we kind of organize them under stock, options, earnings. So if you click on it, you can kind of drill down. Okay. So that's the way to get to the videos. If you go to YouTube, by the way, and you just put like Market Chameleon, YouTube organizes them as well. So you could put Market Chameleon show or something like that, and you'll be able to find it.
Yeah, and if you register for the Market Chameleon channel, you'll be alerted to when all the video. We go live on YouTube, so YouTube will alert you as well. I know we also send out an email to try to alert you when the shows go live. We also on the site, you see on videos, it's live. So we do try to alert everyone that the show is live, and it's good stuff.
So the other thing I wanted to show on the dashboard, we created these alerts, and they're being scanned by our system. It's an automated alert system that's going through looking for different types of alerts when something is triggered. They'll show it here, and it is customized basically to the user based on, like stocks that you're searching, or, are in your watch list, and it'll push out the alerts. So right now I have, these are probably, I look at a lot of stocks. So when there are company events coming up, it's showing me the alert. And if you click on it, you could read more about it over here. So once you click on the alert, Intel has a company event coming up. So you could see here, Goldman Sachs Global Semiconductor Conference, June 7th. That's tomorrow at 11 a.m. And, that might be something I want to tune in or be aware of, because you never know some of these conferences when, a CEO here tells you who's going to be talking, vice president, but when they're discussing things or talking, they could give you potentially information that will be market moving, right? They could reveal something that's market moving, or a lot of times when these events occur, they issue press releases as well, ahead of time, talking about some of how the company's doing. So that's why we keep track of events. They're not always market moving, they're not always like earnings that more people pay attention, but sometimes they could be, you could see a big move anyway, based on what they say. So that's why these alerts are coming up. And to manage them, maybe you don't want that type of alert. As we create more, we just decided that certain people might just have certain preferences. So we created this button here, and you have the ability to go in there and turn off certain types of alerts. So what we did was, we kind of gave it a name here and a sample of what the alert would be like. So here, bearish call spread, bearish call spread at 11 cents seems to be above fair value. So it's kind of giving you just an idea of what the headline would be. And if you want to see it, you could just click on this, show me these. If you don't, just hit hide these. This way, that alert will get blocked if you hide them. And I did, we don't have a screener for calendar spreads right now, but we do get a lot of interest for calendar spreads. And I'll probably work on a screener, but that screener is kind of very intense. So right now, what we do is in the background, we're scanning for calendar spreads, and if we see it, it'll show up as an alert. So here you have a bullish calendar spread, right? So you could turn that alert on. And I believe there's another calendar spread that's bearish in here. There are a lot of alerts, but I got to read through them, but there is a bearish calendar spread as well. So bullish calendar spread would be something where it's a calendar spread, but at the same time, it's looking at strikes, higher strikes. So there's a bias towards the bullish side. A bearish calendar spread will be besides a calendar spread, you have two different expirations. It'll have a little bit of a bearish bias where it's targeting strikes that are below the stock price. Okay. So quickly, just wanted to show that. If there are no questions on this, I'm going to hit on the order sentiment just to get one of the questions out. No questions, Will?
Nope, go ahead.
All right. So let me go to maybe just SPY. I'll use as an example. So on the SPY, I'm going to go to order sentiment just to pop up the page. And, here we see the order sentiment and imbalance on Friday of positive 2 million. And these are based on deltas. So we convert the option trades into delta volume. So an option could have a very low delta, but the penny option has a very low delta. The impact of a dollar stock move will be negligible. Some options have a very high delta. So if it's deep in the money, say call, then a dollar move in the stock price will have a dollar. It will impact the option for a dollar up or down, depending which way it goes. So we convert those to deltas, and we do make an interpretation on if the option was bullish or bearish based on the incoming order flow. And when we talk about that, what does that mean? There's always a buyer and a seller to an option. So what we're trying to interpret is if the incoming order is a buyer or sell based on, are they buying from the dealer or selling from the dealer? So what we try to interpret is, are the customers trying to buy or sell, and what are the dealers doing on the opposite side? Are they buying or selling? And I give you an example. Like, think of a car dealership. They're in the business of buying and selling cars, right? So they're not like really consumer. They're not car dealership. They're not buying a car so they could go use it. They're buying a car and selling car. That's their business. They're just managing their inventory. And that's what market makers are doing, specialists are doing. They're facilitating orders and providing liquidity for customers trying to buy and sell. And there's no indicator on the tape if it's which side is the customer or market maker. It's left up to interpretation. We talked about it in videos. beforehand. But that's what we're trying to do, is interpret what are the customers trying to do, and what are the market makers then doing on the opposite side. So when we look at a plus 2 million deltas, well, what this is interpreting is that on balance, the order flow was more bullish, and on balance, there's an equivalent of 2 million shares or deltas bought in SPY. All right, so there are buy and sell orders here, a bunch of 83 million bullish deltas versus 81 million bearish deltas. So in balance, more bullish than bearish. That's the imbalance here, 2 million. Okay, and that's the average price where it was where the stock was, where they were established, 411.40. So I think the question was the following. Trying to remember it, I read it, I think it was on Friday. Well, if somebody has bought a lot of stock, right? And let's say an institution bought a lot of stock and they bought puts, well, then it's really a bullish bias. That was the question. So in that case, this would negate the option order flow sentiment. And remember, what we're trying to do here is not figure out what everybody's actual portfolio is and every every stock position or whatever. That's not what the point of the option order flow sentiment is. It's looking at just what are people using the options for. So even if you have a very long stock position, which I'm pretty sure most people who are buying puts do already have a long stock position from institutional, but the act of buying puts is bearish. Doesn't matter if you have long stock, because you could have a lot of long stock, and if you're very bullish, you don't need to buy puts. If you think the stock's going to go up, you absolutely do not need to buy puts. It's not required. The act of buying puts is bearish. It reduces the delta in your position. It also has the effect of if a dealer, right, if a dealer is neutral and he sold those puts to you, to hedge them, he has to hedge that delta, he has to basically sell. One way is to sell the stock, right? So once you sell the puts, you have a long delta, right? You have a delta which says that if the stock goes up, the puts will go down. If the stock goes down, the puts will go up. So if you sold them and you want to be delta neutral, you have to sell out that delta. So even if you have a long position, when you're buying puts, it's like reducing your deltas, right? So that's the pressure it's creating on the markets. It's reducing deltas. It's getting shorter, right? So that's what we're trying to do, is look at what are people using the options for, right? Are they using the options to sell deltas or buy deltas, irrelevant of what they have in their stock position? Okay, so hopefully that makes sense, right? We're looking at one market. What are the pressures being created? Because it really doesn't matter to the market maker who sold you the puts. They don't know your stock position, and it doesn't matter to them, because they still, to hedge that delta, they will need to sell stock, or they're going to have a positive delta. So, and dealers are usually neutral because they're in the business of facilitating orders. They don't really, they need to balance their books, and they need to manage their position, manage their risk. So for the dealer, it doesn't even matter what stock somebody has or doesn't have. Once they sell that put or buy the put to hedge, they're gonna go in the market, supposedly, unless they don't want to hedge, but that's the pressure it's creating. For them to hedge, they'd have to go and sell more stock or buy more stock. So that's what we're seeing. What is the pressure being created on the dealers in the market from option transactions? Okay, hopefully that makes sense. I'm not sure if the person who sent me the email is on the show, but that's why we look at it this way.
Yeah, that's super helpful. We did have a couple questions outside of this, D. Boris was asking, how do you evaluate the current volatility in oil? Would you use one of the ETFs if you wanted to see the volatility and where the volatility's been in the past, where it is now? Would you use one of the ETFs or one of the oil producers? How would you look at trying to look at volatility? Because we don't have the futures, so you can't see.
Right. Yeah, we don't have the futures.
I think OIL may be a proxy for oil as an ETF.
USO,
Okay.
maybe you could probably just take, look at one of the ETFs. It might not be perfect volatility because the ETFs also work a little bit differently. You have to read these ETFs track commodities differently, and some of them have these rolls where they use the futures to roll their positions. And when you're rolling positions, you have this you have a curve, right? You have like this time curve where you have contango or backwardation based on where the oil prices are projected near term versus the far term. And that comes into play. You see it in the VIX a lot, right? The VIX tends to go down because the volatility curve tends to slope up. So what's happening is in the VIX, they're using the future, and when you have an upward sloping, you tend to sell your future at a lower price and then roll it out further to a higher price. And that has an impact on that ETF. It's not going to have the same returns or volatility as the actual, underlying or asset. And you got to be careful. So I'd have to go in there and read about them, but I could tell you that it's not a good proxy, like probably for the actual underlying volatility. You might be able to I'm sure you could find oil prices somewhere, like even I think probably on Fred, and download it and calculate the volatility, because that's something where I'm sure you could get the historical prices publicly somewhere, either a government website, maybe try Yahoo Finance, maybe they have it, and they'll let you download it, but you'll be able to calculate it. I don't think the ETF though would be in this situation, when you're following commodities, it might not be a very good way to basically calculate the volatility of the underlying.
Well, there you go. But like for the Rob was asking for this, there's a sector ETF that in theory profits from rising gas prices, the XLE. Yeah. If you wanted to look at what the volatility has been doing in the XLE, I mean, does that curve actually look like you'd imagine the volatility of the oil curve?
Yeah, I'm not sure. The XLE are stocks, so it doesn't have the same situation. You're actually holding the underlyings there. So it's not the same thing as when you're rolling futures, right? It's when the ETF is trying to roll futures, and there's a slope of, going up or down in time, as you go out further in time. So the XLE will not have that situation. They're not hedging it with futures, they're holding the underlyings, right? So you could take a look at the holdings here. But that will be the volatility in XLE, not the oil. Let's just take a look at the holdings here. So you see here, you could take a look at the holdings, the weightings of each holding in that ETF.
Well,
so we're right up.
That's the opening bell, D. We did also have a question from Lauren. He was asking about calendar spreads, looking at calendar spreads. Maybe that's something we can talk about tomorrow. Great show, buddy. Thanks so much.
All right. Thanks everyone for joining. Stay safe out there. I hope you guys have a great trading day and hope to see you guys tomorrow.
Trade in peace, communities. Have a great day. Thanks, Steve.
Bye, Ren.